What's your impression of index investing?
Index investing? Now, what has happened recently is that the indexes are seeing some, I would say, extremes. For example, the S&P 500 and NASDAQ, the percentage of those indexes in the Magnificent Six, robo-taxis will scale during the next 5 to 10 years. So this is getting to your timing question, to $7 to $8 trillion. And if you look at what the taxi networks, and Tesla will be a network providing the service, it'll be like a SaaS, software as a service.
So Kathy Woodson, welcome to Pivot.
Oh, thank you, Ryan-san. I'm so happy to be here.
So you're very famous in Japan because you're a superstar investor, and you were one of the person who discovered Tesla when no one's paying attention, and you were saying that we should invest in Tesla. So that's very surprising for us. First of all, it was you came here at the perfect timing because our viewers and our audience are so much interested in investing instead of saving accounts in a bank, because in Japan, NISA started, and everyone's excited about NISA. So first of all, what's your impression of NISA?
It's a fantastic idea. And it's also, the generations today, because they experienced 08, 09, they understand there are risks out there, and they need to prepare, to have a cushion so they can withstand risks. That's the first thing. And they're actually thinking about retirement. When I was their age, 20s, 30s, I wasn't thinking about retirement.
You weren't?
No. Well, let's put it this way. I should restate that. I saved all of my bonuses. So from that point, but that was just, my parents taught me that. It was more the buffer, the cash cushion against risks.
Right.
So I was saving for that reason. But my generation generally, they weren't thinking about saving at all. It was just these were the baby boomers, and it was the 80s and 90s, and life was good, and life was a party, and they just weren't. And as a result, you'll find that a lot of baby boomers in the United States don't have enough savings. So this is so important, especially for young people, for retirement, yes, but also for those rainy days when you never know, right?
So you talked about cushion, and I talked to a lot of Japanese young investors, and they're interested in investing, but at the same time, they're afraid of investment. So that's why they're relying on index investing. And they just say that we can just follow the S&P 500 and we just leave it as it is.
Yes.
What's your impression of index investing?
Index investing? Well, what they are investing in is what we would call tried and true, which means, it has worked for a very long time. In fact, index-based strategies have outperformed active strategies. Now, we think one reason for that is because of the pendulum shift after the tech and telecom bust in the early 2000s, and then even more so after 08, 09, into safe. I'm not going to be taking any more risk than the markets. I'm just going to stick, with where the markets are going and just participate. If they had been around in the 80s and 90s, which is when I really started my career, nobody did that. Nobody did that at all. In fact, it didn't exist. What was happening back then is mutual funds were just starting, and everyone was an active manager. What did that mean? What did that mean? It meant we were trying to figure out the way the world was going to change in the future, how it was going to work, and use that as our investing style. And it was very successful in the 80s and 90s. It created a huge amount of wealth, and it ended in the tech and telecom bubble. And then, as I mentioned, we had the tech and telecom bust, and then we had 08, 09, and everybody said, to heck with active investing. We're moving either passive index, and so it's been a bit of a self-fulfilling prophecy.
Right.
Flows are into the indexes, and they've been outperforming. Now, what has happened recently is that the indexes are seeing some, I would say, extremes, and the index providers know this. For example, the S&P 500 and NASDAQ, the percentage of those indexes in the Magnificent Six, so the Magnificent Seven used to include Tesla, but everybody threw it out when it started underperforming this year. I'm happy they threw it out because,
You're happy.
Yes, because it's not mature. It's not mature. These other mega tech companies are quite mature.
Yeah, Google, Apple, and Microsoft.
Yes. And they've been tried and true, and they've done an amazing job. But they've reached very large percentages of the indexes because so many investors are investing in the indexes. So much so that the providers are saying, we better take these down a bit, or else we've got too much risk in too few stocks. So that could be a sign that the pendulum shift towards passive might be reaching an extreme, and that maybe the pendulum shift will move back in the other direction. And a great example of why that might happen is Tesla. So Tesla did not get into the S&P 500 until December of 2020.
2020.
Yes, when it was a $500 billion cap.
Wow.
Now, we owned it when it was a $5 billion cap, right? And wrote it 100-fold. Now, many people think that's an unusual circumstance, but we don't think it is, because with technology, and especially AI, changing the world so rapidly, the indexes will not put many of these companies in if they don't have a certain level of profitability, like a 4-quarter moving average of profitability, with the last quarter being profitable. Well, a lot of companies who are really transforming the world, they're investing aggressively right now.
True.
So they are sacrificing short-term profitability. They could be very profitable, but they are choosing to invest because so many of these opportunities are going to be winner take most. Robo-taxi networks, for example. It'll be winner take most. The company that gets people from point A to point B the fastest and the safest is probably the best and will probably gain the lion's share of the market. And so we think this is going to happen very quickly, and you're going to see a lot more examples of Teslas where you miss the first 500 billion.
I see.
And
so there'll be a lot of next Teslas out there.
We think so. We've never seen innovation evolving as quickly and as many innovation platforms evolving together as we do today. And we think the rate of growth of the economies around the world are going to speed up as these technologies move into prime time. And we think the opportunities from an investing point of view are unbelievable.
Interesting.
The indexes will feature them, but after they've reached, fairly large market caps, we think.
Kathy, that's an interesting point, because a lot of young people in Japan are talking about S&P 500 or which country's index will make me richer. And do you think that index investing is kind of backward looking, can I say? Or
well, Yes, in a way it is, but I don't want to say it's bad, okay? So the stocks at the top of these indexes are there because of what they have done historically. They've done very well, and good for them. They're at the top of the indexes. The only thing I would say about that is if we're right about innovation and how quickly technology is going to transform every sector, every industry, really every company, then there's a risk that some of the stocks in the broad-based benchmarks are going to be disrupted, disintermediated. I can give you a good idea of one right now. Potential. Alphabet is near the top, or Google, Alphabet, near the top.
Yes.
And Google has effectively a monopoly on search.
It seems they'll win forever.
It does. It does. And yet we have Microsoft now partnered with OpenAI. Bing is a part of that ecosystem. But there's something even more important. If we don't have to search, wouldn't that be ideal? I hate searching. I really do. It's frustrating.
Right.
I usually don't find what I want, especially mostly because it's around research and they don't understand what I'm talking about and so forth. If it's commerce, they're much better. That's right. However, AI is going to transform commerce. As we all have our own digital assistants, we call them purchasing agents.
Yes.
And our assistants / agents are going to know what we want, when we want it, what's important to us. Is a good deal more important, or is a brand more important? They're going to understand context. They'll know where we are every
So they'll search all the internet and see what's valuable for us.
And they'll present ideas. And maybe we don't need to go search anymore.
That's true. They'll tell us.
They'll tell us. They will. Now, this isn't today, but this is what companies that are starting today intend to make happen.
True.
So Google, interestingly, Alphabet, has the best AI research teams in the world. They bought a company called DeepMind from the UK, and incredible researchers. But they have innovators' dilemma. What are these researchers going to say? The world's not going to work the way you've built this company.
We don't need search anymore. They won't say that.
Yeah, they won't. And I'm not saying search will disappear. I'm sure it will stick around. All new technologies. We even still have mainframes in the world, and those came about, 50, 60 years ago. So I'm not saying it's going away. But maybe they're going to have to rely as a company more on Waymo, which is starting to show some success in terms of moving into cities more quickly and getting people around autonomously. That is going to take a lot of investment. That's not what investors expect right now. So maybe we'll need a transition in the investor base in Alphabet. So I'm not saying it's going away. I don't think it is. But I think it's going to transform. It needs to transform.
Do you think even Amazon will be in that situation?
Well, Amazon has two businesses. The retail business could be, it will not disappear. It probably, in the world we envision, could become a little bit more like Walmart.
Walmart?
Yes. So Walmart in the traditional retail world is the survivor.
Yes.
Walmart, Costco, but the market's restructured and consolidated. They've gained tremendous share.
Right.
So in the online world, Amazon could be that company because there are some people, they're probably older, they won't want personal assistants. They don't want anybody knowing that much more about them. So, so that's the retail business. But we think that younger people are going to really want this idea. Wait a minute. I don't have to go to Amazon for everything.
Interesting.
Which used to be a feature,
Yes.
one-stop shopping and
like the only
convenience.
destination. Yeah.
Convenience, low price, all of that. Well, maybe not so much anymore. The most convenient is having someone else do your shopping for you, your personal assistant, digital assistant, your purchasing agent, and searching the whole world.
So you think
Just
that
for
Amazon
you.
being like one of the
It
everything,
will be one of them.
one of them.
They're going to have to compete. They're going to, and they're a good competitor. But maybe the world transforms. Now, the other part of Amazon's business is the cloud, Amazon Web Services. So if you look at the tech stack today, there's the infrastructure as a service, that's cloud. There's platform as a service, that's Palantir. There's software as a service, that's Salesforce.com.
Salesforce, yes.
We think software as a service is going to shrink as a share of the stack, and cloud and platform will grow. And the reason we believe that is the new large language models like OpenAI, Anthropic, Meta, they are making coding so easy. They're making existing developers much more productive. And other more specialized models are doing so as well. Replit is a company that we own in our venture fund.
Yeah.
I don't know if you've heard of it, but you and I could become programmers very easily. Go to Replit, and if you know very little about coding, you can. It will help you. It's using artificial intelligence. You basically prompt engineer. You basically tell it what you want.
And it codes for us?
It helps code, right? And now, why can this happen? Because with deep learning and transformer technology, natural language processing is the new programming language. You and I both speak natural language. And so we can tell Replit what we want, and it will help us get there. Now, it's very helpful if you do have some coding skills. You'll get there much faster, but we're going to be able to do a lot more. So I think that companies, because engineers are going to become so much more productive, they're not going to need one-size-fits-all software as a service. They can customize internally more and more of what they need. And so that's how we think the tech stack is going to transform.
Wow. So Kathy, I 100% agree with you, but maybe our viewers will think that how long we should wait, because it's true that maybe Amazon or even Google or Alphabet will be disrupted, but in the short term, we want results within a year. So that's why people are investing in index investing. So what's your take on that?
Well, and this is why I set up ARC, was to do the research around this. And the way we've set up ARC, research-wise, is not by sector, not by industry, not by sub-industry, but by technology.
How many researchers do you have?
14.
14. Are they from Wall Street or?
No.
No?
No.
No Wall Street.
No. And I'm not saying Wall Street is very good on the more benchmark sensitive type of investing. That's not what we do. We really want analysts with technology domain expertise. And I learned this from a company called Sanford C. Bernstein. Sanford C. Bernstein was bought by Alliance Capital, where I worked. And the founder of Sanford C. Bernstein said, it's easier to teach a rocket scientist, or I would say today a biochemical engineer, how to read and model financial statements than it is to teach an MBA rocket science or biochemical engineering.
Okay. Mm-hmm.
So that's why we set up the firm this way. It's not that I'm saying that other way is bad. I'm not. I'm saying we're just different, and we're anticipating the moment, and we think it's close, where there's going to be a lot of disruption that will. It's not as though the revenues or the earnings of these companies necessarily go down, but if people expect 15 to 20% revenue growth and they get 10% revenue growth, that's a huge disappointment in the more index or benchmark sensitive world. That's a very big disappointment. So our overlap with the benchmarks being only 5%, we're looking for younger companies that are going to be more the disruptors and are going to surprise in terms of their revenue growth rates on the high side of expectations. So that's sort of what we're trying to do here. In terms of how long this is going to take, artificial intelligence training costs are dropping 75% per year.
Per year.
Artificial intelligence inference costs, so helping us get to the answers, are dropping 85 to 90% per year. And you can see this in our research on our site. That means the speed at which innovation is taking place is accelerating. And the other thing that's happening is AI is the biggest catalyst to all of the other technologies we're following. So it's speeding up all of the other technologies in terms of the convergences between and among the technologies. And I can give you a good example there. Seems like we're talking about Tesla a lot, but Tesla's the post. I know, and we love Tesla. It's the largest position in many of our funds. Tesla, we defined in 2014.
2014?
Yes.
That's
yes.
early.
Yes. Actually, before that, when I was at my previous firm, we defined it. We did not define it as an auto company. We defined it as a collection of technologies that would lead to autonomous transportation. Now, we were early and we're right, but we were basing this on Elon Musk's master plan. He wrote it, right? So he was giving us this idea. We defined Tesla as a robotics, energy storage, and artificial intelligence company. Now, the traditional world, because they identified it and categorized it as an auto company, they were not in a good position to understand how quickly it was going to scale. They were looking at Tesla saying, wait a minute, you mean you're going to line the bottom of a car with cell phone batteries, and you think this is a good idea when cell phone batteries are blowing up in airplanes and regulators are after them? So that was the analyst. And the auto companies were saying the same thing. They're saying, that's just unsafe.
That's not a car. You remember saying, people are saying that,
And they actually, their battery technology was going to be more in the form factor of an engine, right? So Tesla was right. I think all the auto manufacturers will concede that now. But what the other auto manufacturers, the hurdles they'll have to get over are they're going from gas-powered to electric. That's a big one because 90% of their sales still are gas-powered. But more important, they're going to have to go from human-driven cars to autonomous cars. That's a different, that's not even in the zone of the last 100 years of experience. This is an AI project. It's the largest AI project on Earth.
Like robotic taxis.
The robo-taxi platform, by our estimates, robo-taxis will scale during the next 5 to 10 years. So this is getting to your timing question, to $7 to $8 trillion. This is the entire ecosystem, and it's global, including China. And if you look at what the taxi networks, and Tesla will be a network, providing the service. It'll be like a SaaS, software as a service, but it won't be disrupted by other platform and cloud companies. This is a very specialized project, very unique. So that platform technology will get half of that $8 to $10 trillion in revenues globally. We think Tesla has the best opportunity to be the largest player in that market. Now, it'll break down by probably geography in terms of natural geographic monopolies. So I don't know who it will be in Japan. We know Toyota is doing a lot of research, but it could be another company that's doing a lot of research.
But Tesla has the data already, so I think that's the strength of Tesla.
So it's a big strength, and thank you for saying that. So many people don't understand that the most important competitive advantage that Tesla has is the billions upon billions of real world driving data in terms of miles. It probably has orders of magnitude 10 to 100 times more than all of the companies going after.
Because they understand where the bumps are in the roads and where the people like change their directions and everything.
And you know, the data, the reason the data is so important is not the amount. It's what's called the corner cases. When things go wrong, how many of those examples do they have? It's been very interesting to watch Tesla evolve. You know, the number of disengagements that they used to have when the company itself was testing out its new vehicles with the most advanced full self-driving. It used to be, you know, the disengagements would be pretty regular. Now they go a week or two or a month without any disengagement with the newest technology. So that tells you they're getting awfully close. And it's because they have all of those corner cases. They know more about what can go wrong out there than any other company. And that's the most important.
Corner case data.
Yes.
Just a quick question. Do you still believe that Tesla stocks will reach $2,000?
Yes. Our confidence is increasing. Now, stay tuned. October 10th is a very important day. That's going to be the day that we learn a lot more about their plans for robo-taxis and how far along they are and what their go-to-market strategy is going to be. Waymo's is one city at a time, just a few cars at a time. Well, Tesla already has 6 million robots collecting data for it today, daily, minute by minute. I have two of them, a Model Y and a Model 3. And so it has the data advantage, as you say. Waymo will not catch up to that. Absolutely will not. So I don't know if city by city, this is going to be a huge success for Waymo. Right now it is. It's getting all kinds of attention. But if Tesla launches in more a national way, it will become the go-to because, again, it'll be collecting even more miles of data and we'll be able to get people from point A to point B the fastest and the safest. So we'll learn a lot on October 10th. 90% of our valuation, that $2,300 from roughly 230-ish right now, is autonomous. Our conviction in autonomous has gone up dramatically. And so the price target has gone up commensurately.
Do you think AI will like find the next Tesla and come overperform your researchers in ARK?
My guess is they are going to conquer in financial services the benchmark sensitive strategies first.
I see. Yes.
Right?
Because it's easy to conquer, maybe.
Much easier. Ours is much harder. We have to anticipate how units are going to change. If we go into a recession, units are going to change. AI isn't going to know if we're going through a recession. We will probably. Now, it'll figure it out over time. I have no illusions that we're going to have a tough competitor, but that's going to make us better. And we're going to use AI to get there faster. So we believe these digital wallets will handle all banking services ultimately. You know, in our pockets, in our purses, we're carrying our bank branch around with us, right? So that's a great solution. So it's going to transform the financial and commerce experience completely. So that's very exciting. And of course, that involves artificial intelligence.